think you don't have to worry about that because the government doesn't see your crypto anyway, right? Wrong. Spoiler alert, they can if they want to. Well, you're in the right place because today we're learning all about crypto taxes in the UK. Hi everyone, my name is Aga and I represent CoinTracking, the first and the best crypto portfolio tracker and tax software on the market. If you'd like to have a complete overview of all your assets from different exchanges, wallets, blockchains in one place, and then you'd like to generate a tax report with a couple of clicks of a mouse, start a free account today. And if you don't want to deal with your crypto taxes yourself, check out the full service packages available on our website. You've got all the links to that in the description of the video. Now, without further ado, let's meet Shukry, our crypto tax expert from the UK. Hi, Shukry. Nice to meet you.
Hi, how are you?
Good, good, good. Can you tell us a bit about yourself and your company and what you do in the UK?
Yeah, my name is Shukry. I am the director and founder of MyCryptoTax. We are a specialist cryptocurrency accountancy firm. We established in 2014. We started doing crypto tax filing for clients since 2016 tax year.
So that's dinosaur kind of in crypto terms,
Yeah,
right?
we are one of the few accountants who venture into this space very early. I saw the potential for blockchain and cryptocurrency based activities, and so we target that niche. And through that, we self-taught a lot of tax area because there is no structured course to learn on this, so we had to go through a deep learning curve and go through all the manuals, trying to sort of map the traditional asset class into digital asset class. So that was a challenge, but like we are here now, we are supporting more than 1,000 clients now.
Yeah, so we can be pretty sure that you know what you're talking about. So let's dive in. I know that you have kind of three parts for us today for the crypto taxes. And the first one is be compliant, right?
That's right. So I thought like we want to summarize this session into three key messages. First section would be the compliant. A lot of people still we understand not many investors are compliant with their crypto taxes. Percentage wise, I think less than 20% of the overall investor population is compliant. So that's what the key message I want to give. When I say compliant in UK, generally, if you invest in crypto asset, primarily as an individual, it will be subject to capital gains tax because HMRC would generally consider buying and selling crypto asset as an investment activity. So what that means is if you make a disposal or realizing any gain during a tax year, you need to submit your capital gains tax return. So the one main area what a lot of people fail to realize is not only when you cash it out, even when you trade or spend your crypto, that would be considered as a taxable event. For example, like say you move in from Ethereum, you're spending your Ethereum to buy say XRP or another coin, that would be considered as a taxable item. A lot of clients come to us saying, okay, I had never cashed out, so I assume that I don't have tax to pay. That's not the case. So that's why it's very important for you to track all your transaction from day one. I think that's where the coin tracker is very useful. Keep all your transaction on one place, and from there then we can track what are the tax treatment for each of these transactions. For example, even spending your crypto, like using a crypto debit card or credit card, or you're paying gas fees or buying NFTs would be a taxable event. So you need to track all of these transactions, otherwise you will not be calculating your taxes accurately.
I see, but there are certain things that are not taxable events, right? Like if I transfer my crypto from one wallet to another, that would not be a taxable event, right?
That's right. So transferring your asset from your own wallet to another wallet is not trigger a taxable event. Primarily what we are looking at is whether the beneficial ownership of the asset change or the nature of the asset change. So the beneficial ownership changes in the situation where either you gifting your asset to someone else or you are transferring your asset from yourself to your own limited company or another entity. When I say change in the status of the token, it could be like BTC change into Ethereum or Ethereum change into USDT, or you are converting your BTC into fiat currency.
Okay. I see. So, but how about income tax? Because some of the crypto also falls into that category, right?
That's right. So generally, the buying and selling activity would be primarily considered as investment only in exceptional scenario, where if you are doing it in a large scale on a commercial basis, acting like a broker, your activities can be deemed as a trading activity. If that's the case, it will be subject to income tax. Otherwise, majority of the scenario, it will be capital gains tax. Having said that, in crypto, there are so many different type of activities.
Mm.
So for example, you may be using smart contract for various uh, DeFi related transaction like staking, mining, liquidity pool, or you getting paid in crypto for any services what you do. Some of them could be considered as earned income. If that's the case, the market value of the proceed what you receive from these activities would be subject to income tax. So if that's the case, depending on whether your activity is deemed to be trade or non-trade activity, you will be either subject to income tax and national insurance, or only income tax. So the trading activity will come, say for example, an individual providing consultancy service and getting paid in USD,
Mm-hmm.
cryptocurrency, or Ethereum. So this would be a proceed as an income for their business. So all those proceeds will be subject to income tax.
Mm-hmm.
Okay. Similarly, like if say another individual, they are doing a mining activity on a large scale, so they are setting up a lot of servers,
Mm-hmm.
spending a huge amount of money buying, renting premises. So these activities cannot be considered as a non-trading because the operation is significant. So if that's the
Mm-hmm.
case, this will be considered as a trading activity, hence the profit will be subject to income tax and national insurance.
I see, but that's kind of a really large scale operation. That's
Large
not
scale
like
operation.
a lot of that most of us will
Yeah,
not.
if you're just doing it on the side, like you mining certain token or stake some of the coin, so these will be, we will still consider as a miscellaneous income. So there is a
Mm-hmm.
difference between trading profit and miscellaneous income. For trading profit in UK, you will be subject to income tax, plus you have to pay national insurance as well on your profit.
As if
Whereas
it
if
were a
it is a,
business, kind of.
yeah, so if it is a miscellaneous income, you can only you only required to pay income tax, but like you don't have to pay national insurance. The other difference would be like if it's a trading activity, losses can be offset from other income, whereas for miscellaneous
Mm.
income, you can't offset these losses from your other income, from like say rental or PAY of your salary income. So you can only carry forward these losses to offset any future miscellaneous income you may be realizing in the future.
So you cannot mix
That's
those
right. So it need
categories.
to be two buckets need to be kept separately.
Mm-hmm. Who decides which are you, if you're miscellaneous or if
So it's a very good
trading?
question. In our tax legislation, the definition of what is amount to a trade is not defined. So therefore, obviously, we have end up with a lot of case laws.
Mm.
So for not only for crypto, it's common for any other activities. Could be self-employment or business. So generally, HMRC look at something called badges of trade. So they look at like volume of your trade, number of activities, your profit-seeking motivity, how you organize. So these factors will be taken into account. Generally, these case laws covers most of the non-traditional, non-crypto asset. So you can't use those cases and say, okay, because you have 1,000 transaction, you must
Mm-hmm.
be trading. Because in
I
crypto
see.
asset, the nature is different because 1,000 transaction is
1,000 is
very common.
nothing. Yeah.
Yeah, so that's where like you need to make some judgment, and in future we anticipate there could be many case laws which will solidify the argument, but generally HMRC prefer to consider it as a miscellaneous activity. Reason being because it's a very volatile industry, so there are a lot
Mm-hmm.
of huge gain or losses. So the position what they are taking is only when they make a profit they will take a tax. So if they make it
Uh-huh.
as a trading, what happen is essentially the investors making risk at HMRC expense, because when they realize a loss, they can offset these losses from other taxes what they pay.
Right.
So that's why by default they don't want to take like a more aggressive tax approach. They only take a more conservative. So it's most of the time, if it is not a commercial basis, that would be considered as a miscellaneous income, or if
Mm-hmm.
it is not investment, it will be capital gains tax.
Okay, I see. All right, thanks for that explanation. So, if I'm understanding this correctly, so you pay capital gains tax for either when you sell kind of your crypto for a fiat currency, or if you exchange one cryptocurrency for another cryptocurrency, or if you buy things with cryptocurrency. So you exchange the crypto for a service or a product or something like that. And it's sort of gifting crypto is also a type of disposal, right? So
That's right.
unless
Yeah.
it's for your spouse,
Spouse,
from what
yeah.
I understood.
So in UK there is a specific provision, asset transferred between spouse and partner or
Hmm.
registered civil partners will be at a nil cost, nil gain basis. What that means is you can transfer your asset at your cost basis, so you don't realize a gain or loss. So the your spouse who acquired the asset can then realize at the market value, and then they
Hmm.
can offset again their capital gain allowance, which each individual entitled, so they can offset again. So this could be another tax planning option as
Hmm.
well.
Yeah, so I think we'll go more into that in one of the next parts that we
Sure.
have. But how about the all of the staking and mining and liquidity pools and NFTs and all the sort of non-standard, or well, it's becoming standard now, but it's something that was considered new a few years ago. How does that work with
Yeah,
taxes?
so HMRC published a new guidelines back in 2022 February. So this is targeting the DeFi related transaction. They have sort of covered in two angle. So generally, the proceed what you are receiving could be considered as income. However, depending on the nature of your smart contract agreement, sometime it could be capital gain as well. What HMRC classifying this as based on two factors: if your duration of your contract is fixed, or the return what you're gonna receive is fixed, this would be considered as revenue in nature. However,
Mm-hmm.
if your duration of the smart contract agreement or the rate what you're going to receive is not fixed, it would be more like a capital in nature. So therefore, the proceed what you receive will be subject to capital gains tax. So this is a new development after the publication of these guidelines. So you need to not only look at your proceed, you need to also look at the terms of your engagement and see like whether beneficial ownership change and there's fixed terms or duration. So accordingly then you need to classify your income and capital proceeds.
So basically, what I'm hearing is just track everything you have and
Yes,
ask in case you're in trouble, just ask a tax professional for help because this feels
that's
kind of
where I think
complicated.
that's where the coin tracking is a very useful tool for our clients, because if they have the record, then we can go back and classify, reclassify and
Mm-hmm.
code correctly. But like if they don't have the record or they fail to keep record properly, because in our industry it's very common some of the exchange and go bars, like FTX is another good example. Recently a lot
Mm-hmm.
of investors are locked out of like getting data feed. So if you have keeping record from day one, regularly taking regular feeds and look at your data, remediate it, so that when you come to the year end, when you do the tax year end, it will be much more easier for us to fix issues and recode. Within coin tracking, there's so many different category of transaction types. We can code your certain transactions, so according to whatever the tax treatment we required, we can classify and get the correct tax treatment. So that's why like first thing what we tell our client is make sure that you keep real-time record keeping, because it's
Mm-hmm.
not only for crypto, any business that is paramount in now. Technology is available, so the tools are available, so it's no brainer. So it's your own benefit, you have to keep your record up to date.
I see. Sure, that makes perfect sense. It cuts the work you have at the end of the tax year in half, basically,
Yeah,
because
even the
you're
normal tax, like less complex tax, is very taxing for a lot of people. So after 6 months, 1 year, you do the tax, you forget half of the
yeah.
information, so you don't realize. So like crypto is more complex than normal tax, so it warrants you to keep detailed record. Even from a compliance perspective, HMRC expects you to keep record for 6 years for your tax filing. So that means like you have to keep, because the way the tax work, the opening balance of one tax year will be carried forward for the next tax year to calculate your cost basis accurately. So if you
Mm-hmm.
don't keep your historical record correctly, what that means is you are not carrying forward your cost basis accurately. So could be you're maybe missing it out. So certain instance. So for example, if you have a high cost basis start with, and then if you don't have the accurate record keeping, you might be end up paying at a zero cost or like you estimated value. So that could trigger tax investigation as well. So it's always
Yeah,
best to keep detailed tax transactions.
that makes perfect sense, and it's just smart financial,
Yeah.
planning. So okay, so how about forks and airdrops? Because
So
I have a feeling it's a little different.
yeah, so the way we tax fork and airdrop, we look at the nature in which you receive these activities. HMRC classify earned and non-earned airdrops. The earned airdrop is if you have to do something in return, you are receiving these airdrops.
Hmm.
Say, for example, use their service or join their mailing list or something like that. So
So
then
even
this would be
something simple like sharing a tweet or something is
yeah, so
considered doing
charity,
something,
log into
earning.
our mailing list or refer a client. So these activities could trigger income because you're earning those proceed. So in that case, the market value of the proceed what you receive based on the transaction date would be subject to income tax at relevant tax band.
Okay.
But like if you deem like non-earned, it would be considered as a gift at market value. So the market value will be a cost basis. Whenever you make a disposal, any value appreciation or loss will be subject to capital gains.
Okay, that makes sense. And forks, I think, so in the common sense would dictate that if there's a soft fork and there is no new token that you receive, it's non-taxable, right?
That's right. So we had to look at like ideally it will similar to like a bonus issue. So the whatever the cost what you
Mm.
have need to be apportioned to the new cost. If because you derived from that cost base is the additional token. So you need to look case by case, and then we have to determine what would be the correct and easiest option to handle these transactions.
Okay, so guys, if you're watching us and you have any specific questions, don't hesitate to write them in the comments and or join us on Discord and ask them, and we will ask Shukri in his spare time, which he probably doesn't have, but still we will ask to clarify whatever we have for us. Okay, so is it time to move on to section 2 of our meeting?
Yeah, so the section 2, I want to cover the emphasize that the failure cost is very high. So the way the tax system for crypto asset work, we have to look at certain development which will make it much more enforceable any non-compliance. So the first thing is back in 2020 January, the money laundering compliance the legislation extended to include crypto asset service providers and exchanges as well. So what that means is with that, most of the exchanges, centralized exchanges, have to KYC their customer record. So there is you can track it back to the wallet addresses. Second thing is with the money laundering legislation, there are a lot of information powers with the FCA and HMRC and the regulator receive. So that's where like certain exchanges they have previously before the money laundering legislation, the HMRC requested a detail, but they didn't provide this information because they didn't have a requirement. But after the money laundering compliance legislation come into effect, they no longer can say no. So this is where most of the exchanges now sharing their detail. So HMRC has these records, so they can take it back. And with that information, last year what happened is HMRC started sending nudge letters for potential investors who haven't reported. So it's kind of encouraged them to be more compliant. They only target about 5% of the population last year, but like we enforce like they might increase that coming years, because show that like HMRC already know that they have their information. That kind of is not that you can't just not report as a mechanism. And the third thing is if you understand how the blockchain work, all your transaction is registered in your ledgers. So you can hide, you can run, but you can't hide. This is a kind of common mantra I tell my clients, because even after ages they can come back and trace your wallets. Anyone can like go to your Etherscan and check your transaction. You can see the in and out, so that and also there are specific technology companies who specialize in blockchain analysis, companies like Chain Analysis, and these are some specialist software available to track. I know HMRC last year they used vendors up to £100,000 to help them assist with compliance. So they use this detail as well. And on top of that, HMRC also have database facility called Connect. So this is a data mining facility. So in UK,
Wow.
all bank, credit card companies, land registry, DVLA, all also like CSR reporting through the international corporation. If you have an offshore account in a different country, they receive data feed. Similarly, this year the OECD extend the OCR reporting to include crypto asset as well. So in coming years, we can see the initiative where, like, if we are holding crypto asset in a exchange base in a different country, they would be required to send those information to the UK tax authority. And similarly, all the tax authorities worldwide will be exchanging information, so they will have visibility. So they are doing it to improve transparency. That means like they will have a clear visibility of your transaction. If you don't report it, for them it will be easier to track it. And also the final point I want to cover on this is, in UK, the way the tax work, we operate on a self-assessment basis. What that means is HMRC require you to take reasonable care in terms of managing your tax affairs. When you say reasonable care, what that means is you need to make sure you keep record, notify them if you have an income or capital gain, calculate your tax. If you don't understand how to do it, you seek professional advice, and submit your tax return on time, submit payment on time. And if you done this, HMRC assume you have taken reasonable care in terms of managing your tax affairs. If this is the case, if there's any mistake or error, maximum what they can do is go back up to 4 years and collect any unpaid tax. They can't penalize you, or they can't charge you a penalty or interest. However, the second type of behavior, HMRC can classify you as a careless behavior. So what that means is you don't report, you don't keep proper record, you haven't taken professional advice, you haven't submit your tax return, or you submit your tax filing with a lot of incorrect information. If that's the case, HMRC can deem your behavior as careless. If that's the case, HMRC has up to 6 years to investigate your tax affairs. And in terms of penalty, they can range from 10% minimum penalty on the outstanding tax to maximum penalty of 70% for careless behavior, depending on whether you volunteer or HMRC prompt you. Okay, so if HMRC prompt you, the severity of the penalty will be much more higher. But if you volunteer, so your penalty
you admit that yeah,
exactly.
you,
So
you
you'll
kind of
always
feel
get
that
upper
you've
hand.
done it
Yeah, you will
wrong.
get upper hand if you kind of realize, okay, we made a mistake and come forth. They will take it more favorable. And in the extreme scenario, HMRC can also classify your behavior as deliberate concealment. So what that means is you are deliberately trying to avoid paying tax, or you are trying to conceal, or you are manipulating your data to avoid tax. If HMRC deem your behavior is deliberate, they have powers up to 20 years to investigate your tax affairs. So what that means is even after 20 years, they can come and knock at your door. So this is why its compliance is very important. And in terms of penalties for deliberate concealment can range from minimum 70% up to 200% of the outstanding tax.
For
So
20
this is
years.
where 20 years. So like this is where like it's very important to make sure that try to be compliant. So a lot of people assume that, okay, they can't track, they don't have visibility, or I haven't cashed out, so why do I have to pay, or I haven't realized my profit. So as we mentioned previously, even if you don't cash out, some of your transaction could trigger capital gain or income, so that need to be reported and be compliant. And most importantly, one of the advantages money laundering compliance. Sometimes when you transfer your funds to your banks, the banks got to ask, where's your source of fund. Have you, if you say, okay, I've been investing in crypto for so many years, they're going to ask, where's your tax filing? It's always up to date. If not, then it will be a compliant risk for money laundering. It could be considered as a suspicious activities for money laundering compliance. So the bank and financial institutes are compelled to do a CSR reporting on your the money laundering activities. So these are the points will trigger compliance as well. So it's better to be prepared rather than wait till last minute. When you cash out, then the bank would either freeze your bank account, or you would have seen like in media as well, a lot of times investor trying to cash out, the bank freeze your bank account. They do it with a reason, because they can't find your activities to be legitimate. So you don't have your tax filing, you haven't proved them your source of fund. So that's the reason why they are freezing. But like if you have everything up to date, you can confirm your tax filings are up to date, you can give a reference from your accountant, there were no reason why they will freeze your account. Because investment in crypto is not illegal. What is illegal is either money laundering compliance or tax avoidance.
Yeah, the problem is you can do that without meaning to, basically.
Yeah,
So if
yeah,
you don't pay attention, you might be considered a a offender
yeah. So this is
without
what like
actually trying.
this is why the common saying that death and the tax are the two certainty you can't avoid. So everything what you do need to be taxed. So you need to seek professional advice. Don't be complacent and assume your crypto activities is not taxed. Always need to make sure that you understand what you're doing. This is a common principle for any investment, not only for crypto. Before you do the activity, make sure you understand your tax compliance and the impact. So certain activities, if you do it properly, some of the tax implication can be avoided. So this is where the
Exactly.
tax planning come into effect. So rather than you do the activity and realize you have to pay a huge tax bill, best to sort of know what your tax implication, and accordingly you can change certain behavior so that you can minimize your tax liability.
So basically, you answered one of the main questions that we get is, can they really see my crypto, and do I really have to pay taxes? Yes, you do, and yes, they can. So a resounding yes to both of
That's
those
right.
questions.
Yes, certain maybe DeFi exchanges not KYC it, maybe they can't point. But what I want to understand is they can look at the linkage. So, for example, if you have a like off-ramp, like centralized exchanges, and you are sending transaction to a DeFi wallet, they can see this transaction going to that wallet. Then they can assume that because you are sending it, you have to have a reason why you are sending to someone else's wallet, or you are receiving
Yes.
someone else. So they can, even though they can't see the identity of that DeFi wallet, by linking with the other transaction, they can identify this is related to you.
Exactly. And the tax authorities in the past years were not very good with any sort of crypto related activities, but they're getting really smart at this. So,
Yes, so
yeah.
they understand, because like now is crypto is a like 2 trillion industry. So that means like large amount of tax revenue need to be collected, and money laundering compliance another area they focus. And also like in most of the territories, they have extended power, like we have like process of criminal asset POCA legislation even provide you to confiscate certain asset from exchanges. So it's not like if they suspect there is a tax avoidance or is used for criminal activities, they can sometimes confiscate these assets as well.
Okay, so now that we know how bad it is to be non-compliant and how expensive that can be, is there anything we can do legally to minimize our crypto taxes in the UK?
Yes, there's a lot of thing we can do specifically around crypto. One of the common area investor can take advantage is loss harvesting. The way loss harvesting work, before the end of the tax year, you can look at your portfolio. Like if you're keeping your data up to date using like CoinTracking, you can check your cost basis. So for example, what is my cost basis for my BTC holding? If you see, okay, your cost base is very high, you can sell some of these assets and you can buy back after 30-day period to avoid the 30-day rule, or you can buy similar asset so that you realize some of these losses to offset any tax liability you may have to pay during a tax year. So that will minimize your tax liability. A lot of investors fail to take advantage. I mean, UK there is a £12,300 tax-free allowance, so it's always best to kind of realize these asset to offset and rebase your cost basis, so that like every year you are taking out £12,300. Like I know in this recent budget they have reduced that rate allowance to 6,000, and eventually it will be reduced to £3,000 the following year. But still, if you are husband and wife, you could share your asset between your spouse, and you can take advantage of like up to £26,000 tax-free gain.
So if you were approaching that limit for yourself, you can transfer some of your assets to your spouse tax
that's
free and kind of share between yourselves, right?
That's right. So if you do it for like 5 years, you are looking at £100,000 gain without paying a single penny tax. So these are legitimate sources. These are not tax avoidance. This is tax planning. So the spouse partner tax planning, another option the investors can take. The third one is negligible claim loss. So this is the way it works in crypto. Industry is very common. Certain assets go to negligible value. So, for example, Luna and FTX tokens are some of the common example where, like, all of a sudden from £70 it went to zero penny. So in our tax legislation, HMRC allow you to take negligible claim loss where the asset value significantly drop. So you could realize these losses, and you don't have to necessarily sell because there is no secondary market. So you could realize the loss as if you sold it and buy back at the lower cost, so that some of these losses can be offset again your gain that need to be paid tax. So it minimize. Another example is NFTs. Similarly, NFTs also have, like, you bought it at very high cost. Because of the situation, there is no secondary market, or the value of the token gone to a lower level, then you can realize. And the other point around tax planning is there are certain allowable costs a lot of investors fail to record. So, for example, gas fees and exchange fees is a common example, or even like software fees or professional subscription, what you make to accountant and lawyers is allowable, because any cost associated your acquisition and disposal of your transaction will be allowable for tax purpose.
If I'm a miner, for instance, is the cost of equipment also a possible cost?
Yes. So if you are mining, this is what the other areas. So like any cost you spend to generate that business will be allowable cost. So certain costs can be capital costs. So if that's the case, you can claim capital allowances. So this is where it's important to keep track of all your costs, so that these can minimize your profit or gain. And the capturing all your costs. The other item is around realizing some of these losses. Like, not everywhere people make money, so the crypto go on a cycle. So we know we had like a 2017 boom, and then the market was going down, and then back in 2021 there's a kind of peak. So certain tax years you might be realizing loss. So in UK, if you have a net position, you have a 4-year window for you to register your losses. So if you don't register your losses within 4 years, you will be losing your entitlement to carry forward these losses. So it's very important to first quantify, keep record and quantify your losses, and report it, so that it will be available for you to offset any future gain you may be realizing in years to come. So once you report it, it will be available indefinitely for you to offset again any crypto gain or any other gain. So it's very important for you to kind of realize some of these losses. The current year losses can be offset from the current year. Similarly, if you have carry forward losses, you could offset to minimize your tax liability, so that you pay a lower tax. So if you don't keep track of all your historical transaction and the losses, one thing is your cost basis will be inaccurate, because like you may have to go for estimated numbers or zero cost basis. So if you have accurate cost basis, you can calculate your costs correctly, because in UK we have like the average cost ruling, section 104 pooling rule, and the 30-day rule. So it's very complicated calculation. It's very difficult for you to track it through Excel or manual calculation. This is where we recommend to use CoinTracking. It will do a fantastic job in terms of averaging out your costs and looking at the rule, whether we have to take the 30-day rule or not, and then calculating and assigning the correct cost basis, so that you are using the correct calculation.
Yeah, because it's basically just giving away money if you don't utilize that. Because kind of, I think we need to get into the mindset that your loss is obviously a loss and it's bad, but also it's kind of an asset that you can use. So it's not just a loss, but you can utilize it in a way that makes your tax just lower. So
that's right.
Not all bad.
Yeah, so in terms of tax planning, there are some other advanced tax planning option as well. We'll recommend the clients to seek professional advice, like advanced tax planning around pension, gifting, or venture capital and other investment vehicles, which can minimize your tax liability. In some extreme scenarios, you could even like look at the various structures like limited companies or partnership or offshore entities, which can shield some of these income type of transaction, rather than like paying at like 40-45% tax. You can pay it at a lower income tax of corporation tax of 19%. So these may be suitable not for every investor, depending on your type of transaction activities what you do. Maybe some of them will be suitable as well. And then finally, also considering your tax residency status, because again, this is another option for you if you are um, thinking of like moving to become a non-resident for UK tax purpose. Again, this option, certain individual with large gain, they want to kind of save tax by moving to less crypto friendly territories where you have less tax, like for Dubai, Portugal, and Monaco. These are certain territories where they don't tax your capital gain. Again, these option can be taken. There is a right way to do things and wrong way to do things. So you have to make sure that you take the proper advice, do the correct steps, so that you can be compliant and minimize your taxes, so you don't have any sudden shocks later on, saying, okay,
Exactly.
you need to pay a big tax bill. Because in crypto is very common, because it's sometimes the price gradually drops quickly. Certain individual will be end up with the situation, the asset what you're holding is not enough to pay the taxes. So this
Exactly.
is why it's very important to track your gains on a kind of real time basis, and set aside certain fund into a liquid asset, or like stable coin, so that you don't expose them to kind of the huge volatility, so that when the tax time comes, you have enough funds to pay the
Yeah.
tax. So that's the last thing you want, like you don't have a huge tax bill and not enough tax kind of fund you saved up pay the tax. So that will be another failure. So these are all small steps, but these are all tax planning measures you could kind of make your life easier, and be kind of more peace of mind, essentially, so
Yeah.
that you don't have to worry about tax. So you have taken the right measures, so that you can face this situation. A lot of people doesn't want to kind of, there's a tax phobia, they don't want to face it.
Yeah.
But like, you have to face it and take the proper steps, so that you can overcome and take control of
If
your
you
tax
don't
affairs.
think about it, it doesn't go away, unfortunately.
Yeah,
So
just fail to plan is planning to fail. So that's
exactly.
yeah.
Yeah. So basically, for like most people who do crypto as a hobby, for instance, it should be enough to stick to a software like CoinTracking, which just tracks everything and puts everything into one place, and it makes it easier for you with all the reports to kind of see what your gains are and what your losses are. And with tax loss harvesting is much easier, because I have a special report for that as well. And then you just click a button and you get your report. But then if you are more advanced, you do a lot of DeFi stuff, or you have just a larger amount of transaction, a larger amount of money, either gains or losses, that happens both ways, unfortunately, it's probably best to obviously still stick to coin tracking and gather all the information that you have and all the data, but then ask some professional to help you with tax planning, and just don't leave it until the last minute. Because even if you search for a tax specialist a week before deadline, it's probably just too late, and you won't be able to
Yeah, so
make it.
like speaking from our experience, last 4-5 years, around December, January time, we stopped taking new clients, so we could have reach our capacity, because some people still keep it for last minute. If we are onboarding, then we can't guarantee, because 3 weeks is not enough time to get everything lined up. So it's I would say start the process early, and make sure that if you don't submit your tax return on time, you have £100 default penalty. After that, there'll be late payment penalties as well. But like, if you're doing it for the first time, you could apply for 3-month extension, and then from there, then you can start the process. But depending on your circumstances, and we could apply for certain exemption as well. The other area I want to cover is some people might be investing crypto for several years, they haven't done any reporting. You may ask like how you go about correcting it. In
Exactly.
UK, HMRC allow you to correct your tax affairs, something called voluntary disclosure. So the way it works is, this is opportunity for investors or the individual to bring their tax affairs up to date. Once you notify your intention to make a voluntary disclosure, HMRC give you 90 days for you to kind of calculate your taxes, calculate your penalties and interest from the day the tax was due, and make an offer to settle your tax affairs. So we have seen for crypto, especially the early investors who have started their activities around back in 2013, 14 or 16, 17 period, end up with a huge gain, but like they fail to report it. So we can still go back and correct these, and then you will get 90 days to. So as I mentioned, if you volunteer, you will have a more upper hand in terms of settling your tax here, rather than you wait until they come back to and then in that case it will be too late. So the severity of the penalty and your intention is like you are hiding it, so you wait until they come. So this where like it's, in case if you have a prior period tax you haven't reported, it's still not too late. You can take advantage of the voluntary disclosure facility and then report it and then bring it up to date. That way like you keep your funds legitimate, so you won't have an issue extracting the fund to your banks. You can prove that everything is compliant now, and then from there you keep proper record going forward. You do the proper filing, so that way it's compliant, so you don't have to worry about not paying the tax or freezing your bank account or having a huge tax bill later on.
I see. So you basically answered the question that we had. This is from Jenny, that she knows, or she already won't be able to do the taxes on time, and what now? So she should just apply for an extension, is what I'm understanding.
Yeah, so like so first thing is quantifying it. So if you don't look at it, some people think, okay, I invested 10,000 pounds, now my portfolio is 5,000 pounds, so I made a loss. That's not how it works, because if the tax happen based on the transaction history. So depending on when you had the transaction, you may realize certain gain. So you need to quantify it, and once you quantify it, then you can ascertain whether you had to do a prior period filing or apply for extension, and then that way be compliant.
I see. But basically, if you just are proactive and admit that you're wrong or you're late, it's basically better than just
Yeah, so the
waiting for things to
HMRC
happen.
realizes crypto is a very novelty concept. Even a lot of accountants don't understand how crypto tax work.
Yeah.
So what about the investors? So they know the situation. That's where they give opportunities, or even they're sending nudge letter rather than kind of enforcement letters. Reason for that is they want to encourage. So we also work with HMRC and other kind of industry professional to educate our clients as well, so that so they can be compliant. Be compliant, that doesn't mean that you will be paying huge tax. So what that means is you're bringing everything together, have a professional judgment. Based on that, you can see certain time you might realize some of the losses, so you carry forward. So first step would be to bring everything together into places like CoinTracking, so that everything in visible, so you can look at all your data, and then from there take the proper decision whether to report. If there's a liability, if your gain is below the 12,300 tax-free allowance, then there's no requirement for you to report. So then at least you quantified it, and then carry forward the next year, and then you can start it from a fresh year. You, if you have to loss harvest or tax planning, then you have all the tools available for you to take advantage.
Okay. Do we have anything else from your side, or can we move to some of the questions that we have from our users?
Yeah, we can address the questions.
Yeah, just a couple. So a very popular one from Adrian. I think that's the right way to read the name. I was scammed, lost coins. How do I go about taxes now?
Okay, so the first scenario is it's all case by case. HMRC position is generally they won't allow you to claim losses for scam or theft. Reason for this is in a legal sense, you are still have the legal right to reclaim this asset. Okay, until you kind of have a confirmation that no way you can recover, there is no way of getting compensation, you cannot claim losses.
So basically, it's like blockchain is really not your friend at this point.
That's right. Like if this they allow this, everyone would be saying, okay, send the asset to some
Yeah, I
address
guess.
and say, okay, I lost my funds. So
Right.
that's where like you need to have a solid evidence to prove that you have tried to kind of scammed it. However, like if you invested in like scam project where like they have issued you token, but now the tokens are worthless, for those you can claim negligible claim loss because you
I
have
see.
received the asset but there is no secondary market, then you can realize those losses. So we need to look at each individual cases. Based on that we can ascertain whether it's allowable or see, unless you have a strong evidence to prove there is no way of recovering these funds, only on that scenarios we can claim losses.
Well, that kind of makes sense. Yeah. Okay, one from James. I think that this question comes from somebody who's maybe been a resident in some other country, because in some countries you have the short-term and long-term capital gains tax. So if you hold a certain asset for a longer period than, for instance, 1 year, it becomes tax-free or the tax is reduced. Is there anything like that in the UK?
In UK there is no long term short term duration, so everything regardless of the duration, if you dispose asset you are liable to pay capital gains tax. So it could be 1 day or year or 10 year, doesn't matter. In terms of the tax planning, yes, there's a lot of options available which we kind of went through previously. Depending on your circumstances you can plan ahead. Another main area is around crypto. A lot of people don't realize they need to think from a long-term perspective is inheritance tax, because in UK there is something called inheritance tax where when you're pass away and you have to transfer the asset to next generation, there is a capital 40% inheritance tax after certain allowance. So your crypto asset will be part of your estate, so you need to make sure that you include them in the will and take all your precautions, and then understand how the tax implication, if you are thinking of holding this asset to transfer to your next generation, you have to think about the inheritance tax implication as well.
Okay, good to know. This is basically sort of a bigger problem, because do the transaction fees count towards my cost basis even if they're not included in the transaction? So a lot of people also in the UK have trouble calculating their cost basis. So what can you kind of answered that pretty much anything that's kind of used to gain the new coins or any sort of gain can be counted as the cost, right?
That's right. So what we have to look at is any cost related to your acquisition of the asset or the disposal of the asset will be allowed. For example, like say you are acquiring asset from an exchange and then you have to pay a fee, that is allowed. However, like say for example, you have to transfer your fund from your bank to the exchange and the bank charges you a fee, because that is not directly related to your acquisition. So that transfer fee,
I see.
bank fee is not allowed, but like the exchange fee is allowed because that's part of your acquisition. Similarly, like as part of a disposal, you have to pay any disposal for the fees that allowable, or you have to use a professional to do your tax filing or lawyers for any contract agreement. All of these will be allowed costs.
Okay, that's actually kind of nice, because a lot of countries are very strict about those. So go UK. Okay, the last one is from Kane. There seem to be some changes coming in 2023. Do you know what they are? I mean, the tax law seems to be changing constantly, so it's not really easy to track all that.
Yeah. So what you need to realize in UK, HMRC haven't published any new tax laws or for specifically for crypto asset. What they have done is they have published tax guidelines. So this is the interpretation of HMRC's the existing tax laws interpreted to relate to crypto asset. Okay, so the primary legislation what we use the capital gains and income tax legislation, and then they interpreted some of these rules already available, how that need to be used for crypto asset. HMRC currently looking at issuing a separate legislation for crypto asset. At the moment, they are in discussion. They are looking at a few areas. NFT is one big area. We also involve in roundtable discussion with HMRC and other industry leaders on these, looking at how NFT should be treated, because there's so many different scenarios from
Mhm.
so that's just some big area. And they also want to revisit the DeFi guidelines which they published in February 2022, because UK is the only country where there's certain transaction considered as disposal when with the beneficial ownership change. That create a lot of issues in terms of certain DeFi related project, like lending and borrowing. The more motivation is to not realize the disposal, because if it is disposal, what the point of like taking a loan? You can just straight away go and make the disposal and then realize. So
Exactly.
HMRC revisiting that area as well. D5, they agreed that it's a problem. The guidelines what they have is not fit for purpose. And DeFi is another, the NFT is another area they're focusing. We anticipate maybe later next year some guidelines around NFTs, with all the changes happening with the ministerial level and the governments, the ministers are changing, so the priorities are changing as well. So that's where some hold up. Otherwise, UK, they have made it clear they want to be the leader in this industry. They are one of the first tax authorities to publish guidelines most of the tax issues relating to crypto. So they want to take the lead. So certainly they will be publishing certain guidelines in coming years. So far we don't have a visibility. We anticipate it has to be later part of 2023.
Okay, but we do know that the tax-free amount is being reduced, right?
Yes,
Since
so we had a
2022.
budget recently. So as a part of the one factor affecting most of the investors is the capital tax-free allowance for capital allowance has been reduced to 6,000 for following year, and then after that it will be half to up to £3,000.
Okay, so not good news, but well, it is news.
Yeah.
Okay, Shukry, thank you very much for your explanation. I feel a lot more confident in all the crypto tax knowledge for the UK now. I hope you guys found it helpful, and I'm pretty sure this is not the last time we're seeing each other, so stay
Yeah,
tuned.
sure. Thank you very much for giving the opportunity. If any of your customers have any queries, they can reach out to us via the UK partners for CoinTracking, and our website mycryptotax.co.uk. You can reach out to us with our queries. We have a free initial consultation option as well. So anytime if you have any questions, you can reach out to us, or you can send it via the CoinTracking support team. If they can't answer, they will route it to us, and we can get back to you.
Sure. Okay, guys, that was a lot. Thanks for being with us today. So remember, do your taxes, start tracking with CoinTracking today if you haven't already. You've got all the links that you need in the description of the video. And if you have any questions that we haven't answered, join our Discord and ask them there. I'll see you next time.